Gold has always carried a certain mystique. For centuries, it's been the ultimate symbol of wealth, power, and permanence. But in 2025, something unusual is happening. Millionaires around the world are quietly moving their money into gold. Not stocks, not real estate, not crypto, just the same ancient metal that kings once hoarded. The question is, why now? What do they know that the average person doesn't? Stay with me, because by the end of this video, you'll see that gold isn't just a precious metal anymore. It's a warning signal. Before we dive in, take a second to tell me where you're watching from, your country, and what time of day it is. You'll see why this matters in a moment, because gold's story changes depending on where you live. For Americans, it's a hedge against inflation. For Europeans, it's protection against a fragile banking system. And for millions in Asia or Africa, it's survival, a way to store value outside collapsing currencies. If you're new here, hit that like button, subscribe, and let's explore why gold, an ancient form of money, is suddenly back in fashion among the rich. First, you need to understand one thing. The global financial system runs on confidence. Every dollar in your account, every bond, every share on the market, it all depends on trust. The belief that money will hold its value, that governments will repay their debts, that banks will stay solvent. But that trust is fading. Inflation is eating away purchasing power. Central banks are drowning in debt. Geopolitical tensions are reshaping global power. And when confidence begins to crack, gold starts to shine. Let's start with inflation. In recent years, governments printed trillions to keep economies afloat during crisis. But that money didn't vanish. It spread through the economy, pushing prices higher everywhere. Housing, food, energy, healthcare, everything costs more. Central banks tried to fix it by hiking interest rates, but the damage was already done. Real wages haven't caught up. The purchasing power of the dollar, euro, and yen continues to quietly erode. Millionaires see it. They aren't fooled by official inflation numbers. They know their wealth is melting in real time, so they move to something the system can't print: gold. But inflation isn't the only reason. The deeper issue is fragility. After decades of artificially low interest rates, the global economy is addicted to cheap money. Governments, corporations, even households, everyone is buried in debt. When interest rates rise, that mountain of debt becomes poison. We've already seen it: major bank failures, liquidity crunches, sovereign debt scares. And when the system starts to shake, millionaires know there's only one place left to hide. Gold doesn't depend on banks. It doesn't need an internet connection. It doesn't rely on promises. It's value you can hold in your hand. But there's also something psychological at play. Wealthy investors aren't buying gold expecting fast profits. They're buying it because they expect instability. Historically, demand for gold spikes before major financial shifts, before wars, currency crises, or resets in global trade systems. History repeats itself. Before World War I, gold reserves surged. Before the collapse of the Bretton Woods system in the 1970s, demand spiked again. And today, that same pattern is unfolding right in front of us. The data proves it. Central banks, especially in China, Russia, and India, are buying gold at record levels. They're cutting exposure to the US dollar, quietly diversifying their reserves. That's a massive signal, because when governments start hoarding gold, it means they don't fully trust paper money either. Millionaires are just following the lead. Let's break down who's buying. The first group is the defensive millionaires, those protecting their wealth from inflation and currency devaluation. They're not speculating, they're preserving. The second group is the strategic investors, people who view gold as a geopolitical hedge. They see that global trade, once dominated by the US dollar, is fragmenting. The rise of BRICS nations and talk of new reserve currencies suggest a shift away from American dominance. Gold will be central to that new reality. The third group is the opportunists, those betting on fear itself. They know that when panic hits the mainstream, gold prices surge. These investors want to be early, before the crowd rushes in. But here's the real secret: this gold rush isn't about gold itself. It's about distrust. Gold is simply the mirror reflecting how fragile modern finance has become. You don't need to be a millionaire to see it. Look at the US national debt, over $34 trillion and still climbing. Look at how every major government runs massive deficits. Look at how living costs rise, while savings accounts earn next to nothing. The truth is, the system needs inflation to survive, but inflation silently steals from savers. It's a transfer of wealth from the public to the powerful. Gold resists that theft. It doesn't pay interest, but it also doesn't lie. It can't be hacked, defaulted on, or inflated away. It's not a promise, it's proof. That's why smart money is moving quietly, not because they're nostalgic for ancient money, but because they're preparing for the future. The next time someone says gold is outdated, remember this. Every major empire in history, Rome, Britain, the United States, eventually debased its currency to extend its lifespan, and every time, gold protected those who saw it coming. The modern economy may look advanced, digital, and complex, but the rules haven't changed. When the system becomes unsustainable, capital flees to what's real. Millionaires aren't buying gold for glamour, they're buying it for survival. Let's go a layer deeper. Because the real reason the wealthy are turning to gold isn't just fear or inflation, it's positioning. The global financial system is entering a new phase, one that could redefine money itself. To understand what's coming, we need to go back to the foundation of our monetary order, the US dollar's global dominance. For nearly 80 years, the dollar has ruled as the world's reserve currency. It earned that position after World War II, under the Bretton Woods Agreement, when every major economy pegged its currency to the dollar. And the dollar was backed by gold. But that system collapsed in 1971 when President Nixon closed the gold window. From that moment on, money was no longer tied to something real. It became a promise that governments could print endlessly. Since then, global debt has exploded, now surpassing $300 trillion. That's a number no one can truly repay. Central banks tried to control the chaos by slashing interest rates and printing even more currency. But here's the problem. You can't fix debt with more debt. You can't create growth by printing illusions. At some point, confidence breaks. And when it does, the system must reset. That's where gold comes in. Because throughout history, every time paper money has failed, gold has returned as the foundation, the anchor that restores trust when everything else collapses. And once again, the world is inching toward that moment. The wealthy understand this pattern. They know the dollar's dominance isn't eternal, and they're preparing for what comes next, a multi-currency world where gold quietly reclaims its role as the foundation of value. Now let's talk about something most people outside financial circles barely know exists, the de-dollarization movement. Across the world, nations are slowly reducing their dependence on the US dollar for trade and reserves. Russia and China now trade energy in yuan. India is experimenting with rupee settlements. And BRICS nations are openly discussing a new common currency, potentially backed by commodities or even gold. Every one of these moves chips away at the dollar's global supremacy. For the United States, this shift is dangerous. The dollar's dominance allows America to borrow cheaply, run massive deficits, and enforce its will globally through sanctions and control over the financial system. But if that privilege weakens, the US economy could face real pain, rising inflation, higher interest rates, and a sharp loss of global confidence. And for investors, that means one thing: volatility, uncertainty, risk. That's why gold has become the ultimate insurance policy against this shift. Gold doesn't care who runs the global system. It doesn't rely on faith in Washington, Beijing, or Brussels. It's neutral, borderless, and universally trusted. That's what makes it the asset of choice for those who understand geopolitics. But there's another layer here, one that most people completely overlook. Central bank digital currencies, or CBDCs, governments around the world are racing to launch their own versions of digital money, controlled directly by central banks. On the surface, it sounds futuristic. Instant transactions, no cash, perfect records. But for the wealthy, this represents the ultimate risk, a future where every transaction can be tracked, taxed, or even blocked with a click. When money becomes programmable, freedom disappears. Imagine a world where your spending is tied to your carbon footprint, your political opinions, or your social score. This isn't science fiction. It's already being tested in pilot programs across Europe, China, and parts of Africa. The wealthy see this coming, and they don't like it. Gold, by contrast, exists outside the digital system. It's private, untraceable, and immune to algorithmic control. That's why demand for it isn't just financial. It's philosophical. Let's look at what's actually happening. In 2024, global gold demand hit record highs. Central banks collectively purchased over 1,000 tons, the largest annual amount in modern history. China alone added hundreds of tons to its reserves. But here's what most people miss. It's not just governments. Private gold buying among high net worth individuals has also exploded. In places like Singapore, Dubai, and Switzerland, private vaults are filling up fast. Some of the world's richest families are quietly transferring wealth into physical gold. Not ETFs, not paper contracts, but real bars of metal. Why? Because when crisis strikes, paper promises vanish. Only what you can physically hold matters. You see, gold's true value isn't in its price, it's in its independence. When everything else becomes someone else's liability, your stocks depend on CEOs, your bonds depend on governments, your cash depends on banks. Gold stands alone. It's the only asset that isn't anyone's promise to pay. Now, let's address what skeptics always say. Gold doesn't produce income. That's true. It doesn't pay interest or dividends. It doesn't compound, but that's not the point. Gold isn't meant to grow your wealth. It's meant to protect it. It's not the engine. It's the fireproof vault. When times are good, you might not need it. But when times are bad, when currencies collapse, banks freeze accounts, or inflation spirals, it becomes priceless. Let's take a look at history. Imagine you were a wealthy businessman in Germany in the 1920s. You had stocks, bonds, real estate, and cash in the bank. Then hyperinflation hit. Within months, your paper wealth was worthless, but those who held gold preserved their fortunes. Or take Argentina, where inflation has destroyed savings again and again. Families that kept gold coins have survived generations of economic collapse. Now bring that forward to today. Inflation is rising, debt is exploding, geopolitical tensions are heating up, and global trust in institutions is eroding. You don't need to be a historian to see the pattern. The world is heading toward another reset, and the wealthy are already positioning themselves ahead of it. But here's the paradox. While the rich quietly accumulate gold, the average person is told it's obsolete. Mainstream media calls it a relic. Financial advisors say, just buy the S&P 500. Yet, behind closed doors, many of those same advisors have gold exposure in their private portfolios. It's the oldest trick in the book. Tell the public to hold paper while the powerful accumulate the real thing. And here's something else to watch. Gold isn't moving alone. Look at silver, platinum, even copper. Commodity prices are rising, not purely because of demand, but because of distrust. As people lose faith in fiat currencies, they turn to tangible assets, things that exist outside the banking system. So when millionaires buy gold, they're not just buying metal, they're buying freedom. Freedom from digital control, political risk, and economic collapse. They're saying, I want something that will still hold value even if the internet goes down, even if the markets crash, even if currencies fail. And here's where it gets really interesting. This shift won't stay quiet for long. Because when fear hits, it always goes mainstream. It only takes one headline, one sudden shock in the markets, for everyone to rush toward safety. And by then, the price will already have moved. The rich are getting in early because they understand how the psychology of money works. They know that when confidence breaks, everything gets repriced. And gold, as it always has, will rise from the ashes of paper money. Now let's zoom out, because what's happening right now isn't just about economics. It's about power, it's about control, and it's about quiet preparation for a new monetary order. The millionaires and billionaires buying gold today aren't reacting to short-term trends. They're reading the long-term script. A script that's played out countless times before. Empires rise, they expand, they overreach, and eventually they collapse under the weight of their own financial arrogance. Every empire follows the same sequence. It begins with hard money, something real and scarce. Then, over time, the hunger for growth, war, and control forces leaders to debase it. Rome began with pure silver denarii, coins that represented real value. But as the empire expanded, greed replaced discipline. They diluted the silver with copper until their money became worthless. The British Empire repeated the same mistake with paper pounds. And now history rhymes once again. The American Empire is walking the same path, replacing gold with promises and discipline with debt. Here's the truth few want to admit. The US dollar's dominance isn't eternal. It's already cracking. When countries begin trading oil, technology, and raw materials outside the dollar system, that's not background noise. That's a signal. The same kind of signal the world flashed before every major monetary shift in history. The Dutch guilder once ruled global trade before the British pound replaced it. Then the pound fell to the dollar. And now the dollar stands at the same edge. But this time, the world is far more connected, and the alternatives far more diversified. China, Russia, and the BRICS nations are building parallel financial networks. Blockchain technology has introduced decentralized currencies that governments can't fully control. And quietly, gold is re-emerging as the neutral bridge between all these systems. The global elite understand this. That's why central banks are hoarding gold at a pace never seen before. It's not speculation, it's strategy. When the next crisis arrives, the nations holding the most gold will hold the most leverage in shaping what comes next. Because when you can't trust paper or promises, you trust weight, ounces, bars, vaults. Now, let's look at the psychology behind the wealthy. For most people, inflation is an inconvenience. Prices go up, savings buy less. But for the ultra-wealthy, inflation is existential. Their wealth structures depend on preserving value over decades, not just years. They can't afford to rely on a financial system engineered to slowly erode purchasing power. So they diversify, not only across asset classes, but across jurisdictions. Real estate in Switzerland, art in London, companies in Singapore, and deep in private vaults in Dubai or Zurich. Gold serves as the anchor. It's the one form of wealth that no government can print, freeze, or easily confiscate. And that last word, confiscate, carries a heavy lesson. Because history shows that when financial systems break, governments often turn to their citizens' gold. Think back to 1933, when President Franklin D. Roosevelt signed Executive Order 6102, making it illegal for Americans to own most forms of gold. Citizens were forced to surrender their coins and bars in exchange for paper dollars. Shortly after, the government revalued gold, instantly devaluing the dollar and transferring wealth from the people to the state. The lesson is timeless. When the system is under pressure, gold becomes not just valuable, but dangerous, because it exposes the weakness of paper promises. That's why the modern rich don't keep their gold in plain sight. They store it overseas in private vaults, outside the traditional banking system. Not because they're paranoid, but below sweet army or but because they know the precedent. They've seen what happens when trust and money collapses, and they refuse to be caught unprepared. But there's a deeper meaning behind this movement, something even more profound. This rush toward gold is also a rejection of illusion. In a world where billion-dollar companies can evaporate overnight, where digital accounts can be frozen or hacked, gold stands as something timeless and unhackable. It's physical proof of value in an increasingly virtual world, and that's what terrifies governments and central banks the most. Because gold is one of the very few assets that exist completely outside their control. It can't be inflated away, it can't be programmed or tracked, and it can't be replaced by a line of code from a central bank. The more people realize this, the weaker the grip of fiat currency becomes. Now, imagine the next global crisis, one even deeper than 2008. Stock markets crash, banks tighten withdrawals, currencies begin to shake, panic spreads as people scramble for stability. But this time, governments are already drowning in record debt. There's no room left for massive bailouts or aggressive rate cuts. That leaves only one tool: money printing, on a scale the world has never seen before. And that's the spark that ignites the next wave of inflation, or even hyperinflation. Gold will surge, of course, but by then, it won't just be about profits, it will be about preservation, maintaining purchasing power when everything else burns. And here's the cruel irony: most people won't have access to it. The wealthy will, the central banks will, but the average person, the one told for years that gold was a barbaric relic, will be left holding devalued paper. That's why this surge of millionaire gold buyers isn't a fad, it's a warning. It's the canary in the coal mine, the same pattern that's repeated before every major monetary transition in history. The public always wakes up too late, so what happens next? Most likely we'll see a slow motion shift before the shock. Inflation will cool temporarily, markets will rally, governments will declare victory, but underneath the foundation will keep crumbling. Debt rising, wages stagnating, and trust slipping away. Then something breaks. Maybe it's a major bank failure, maybe a geopolitical shock, maybe a sudden loss of faith in US treasuries. And when that moment comes, the rush begins, and there won't be enough gold to go around. Physical supply is finite, demand will explode overnight, prices will soar, but the price won't be the story. Ownership will. Because in every economic reset, wealth doesn't disappear. It simply transfers from those who react to those who prepared, from those who believe in the system to those who saw through it. That's what this movement is really about. The millionaires buying gold today aren't fleeing risk. They're running toward freedom. They're buying control, certainty, and time in a world rapidly losing all three. Because in the end, gold isn't just metal, it's memory. It remembers every empire that fell, every currency that failed, and every lesson humanity keeps ignoring. It's not the asset of fear, it's the asset of foresight. So when you see another headline saying gold hits a new record high, remember, that's not gold rising. That's the dollar falling. That's the system quietly shifting beneath your feet. And those who recognize that shift, who act before the crowd, won't just survive the next chapter. They'll define it.